All right. So yeah, short story. I've been working in the payment industry for 10 plus years. I helped build a mobile payment app / scheme from zero into a Series B company. You can now use the app to pay at the major supermarkets in Austria and Germany, including at the European Football Club. Now, eventually, I decided to build my own payment network, a new way of paying, completely based on crypto rails and replacing the traditional banking settlement with a crypto-based settlement. But before I started, I had one question. What problem are we really solving, and what's so wrong with traditional payment? After all, it works perfectly fine. You can pay worldwide with your app, with your credit card, in any currency, and so on. You can't really improve the UX. Second, most people outside of this room don't really care that much about permissionless payments, decentralized blockchains, and so on. So that's not a reason for them to switch either. There is one thing, however, the elephant in the room is the cost. It works, but it's incredibly expensive. It's a $2.2 trillion per year that the payment industry is raking in the form of fees to feed themselves. That puts it firmly in the list of the top 10 countries by GDP. And if you drill it down on a per person level, every person in the world is paying $300 per year to be able to pay non-cash as a tax, which translates to a 3% hidden payment tax you don't even realize you're paying, because it's just siphoned out by the industry during every payment. Now, the problem is, as a business, as a person, you can't escape that trap. If you want to accept non-cash payments, you have to go through the payment industry. Now, with crypto, it's the first time you actually can escape that thing. Because for the first time, you can accept non-cash payments without the need of an intermediary, a bank, or whatsoever. You can simply send your dollars from your wallet into the wallets of the merchants directly. The problem with this approach is simply nobody accepts it. You can't pay anybody. So therefore, it's tempting for us to just issue credit cards for all the crypto holders. They top it up with their crypto coins, whatever, to be able to pay with the card in the Visa network. Now, the problem I see with that is that it doesn't really solve the big problem. In the end, the moment you're tapping your card, the money is taken out of the crypto economy and going through the dark alleys of the payment industry, where there's banks hiding behind every corner trying to take a cut from that payment. However, the experience is great. I use it myself. I've got the Gnosis Pay card, great. But every time I pay, a little part of me dies because I've just off-ramped money from the crypto economy into the traditional finance systems. So we are not helping the industry at all. What I like, however, is how seamless it works. It doesn't matter what currency the merchant has, what country he is in, what bank he's using. The moment I see the logo of Visa, I know I can pay. And that's exactly the experience we're trying to replicate with Yodl. So when we set out to start the Yodl Club, we set up a few rules, 2 rules. Rule number 1 is to not build yet another token, yet another chain, bridge, wallet, DEX, off-ramp, and so on, but rather take the existing ones and make them interoperable and usable in a payment context. Rule number 2 is to embrace the options. At this conference, we've seen there's so many ways you can handle stablecoins, and you should be able to choose how we would like to keep our assets. And the way we do it, if you look at a payment, there's 2 sides. There's the receiver, and we'll let them choose however he wants to get paid. On the other side, the sender itself should also be able to choose how he pays the bill. The way it works with Yodl, in the end, we've got a DApp. It works similar like Uniswap. It connects to a smart contract, but you use the DApp in the front end. To create a Yodl link, you simply add your existing ENS domain, subdomain, Web3 domain, whatever you have. You can even use the wallet address. You get a link that you can send in a message or scan with a QR code. To configure your payment preferences, you can do in many ways, for instance, using the URL itself. In this case, Burger Bob is in the States, and he's invoicing in US dollar and prefers to settle his money to always receive a USDC coin. In this case, I enter $5, and Bob will eventually receive $5 worth of USDC. The next step is completely decouple the invoicing the local currencies from the settlement token. So you can invoice Turkish lira exactly the same way and choose how you'd like the payment to be settled. Either in USDC, Tether, any stablecoin really, any ERC20 token really that has an on-chain price feed. We do the conversion on-chain using these price feeds so nobody can cheat. Now, is this, oh well. From the sender part, the sender, he doesn't have to pay in the token, in the currency that the receiver expects. If he has it, it's fine. If not, he can pay with any other token that he has in his wallet. At Yodl, we integrate an automatic swap from whatever the user uses to pay into exactly what the receiver expects. We aggregate the liquidity from Uniswaps and curves to make that happen. If you don't have a token on that specific chain, again, rule number 1 of Yodl, don't build your own bridge. We integrate the existing ones and adapt as new technologies emerge, such as ERC76083, which will hopefully bring great bridgeability to our world. Now, the next step is how do I actually get the money into my bank? Same story, we're not actually doing our own off-ramp, but we're building the existing off-ramps and make them better. 10% of the people already have an exchange account, but they struggle to actually deposit money there because it's very complicated. They worry about sending the wrong token on the wrong chain. We simply configure automatic payment links for these exchanges, so a person just has to add their address to be able to receive the money the correct way. He can't make any mistakes. The same, which we believe will emerge very quickly, the next generation of off-ramps like Beam Cash, Monerium, where you sign up, KYC, configure your IBAN, then you get an address and you can send money there. For us, it's just another Yodl link. You can use it to pay in the same interface you use to pay your buddies. Next up, e-commerce. That's how we all started. Our case supports the full e-commerce flows. You can integrate it into your web shop. It works exactly the same as any crypto payment processor. In the web shop, you're redirected to a checkout page. The big benefit of our side is it's completely non-custodial, decentralized, permissionless. We never hold your assets. The money goes straight into your wallet. With that, we're not actually a payment processor. You can simply start accepting money in your web shop without having to sign up, KYC, or anything. We're just a technology and not regulated by the common payment regulations. With that, you can integrate it directly as a merchant into your web shop or go through a payment processor if they integrate that, which we hope. For them, we're just an interoperability solution. With these e-commerce transactions, that's how we can make the money. We charge a very low 0.2% Yodl fee for every payment, which is about 10 to 20 times less than what you will pay accepting credit cards. We also have a platform support, so if you have an NFT or ticketing platform and charging invoicing money, you can directly charge the fee, similar to Stripe Connect, with every payment. So if that's interesting, please contact us. We're building that out as we speak. I'll skip that. But the thing that I'm most excited about is that we're building a platform. We provide hooks before and after the payment on and off chain, so you can customize the payment according to your needs. In some countries, you might have to check against an OFAC blacklist, which you can do with an on-chain before payment hook that restricts payment that coming from that only allow normal wallets to pay. You can encode any regulatory checks using this smart contract checks as an on-chain hook. You can also, as a merchant, provide discounts, lottery wins, loyalty systems, and crucially also you can have hooks off-chain. So you can run an off-chain KYC process with some zero-knowledge crazy technology, which is way above my pay grade, and integrate all kind of additional tricks into that. Now finally, if you want to try it out, there's a gentleman called Michael in Thailand who's rescuing street dogs and builds a sanctuary. If you want to try it out, you can scan the QR code and make a Yodl payment to help a fellow dog out. Other than that, we have a booth downstairs if you have any questions.